Okay, folks, welcome to Best Stock Charts for the New Trading Week. This is Bob Desmond, and what we're going to talk about today are the charts of Zim Holdings, Coinbase, Zoom, and Ring Central. Now, a couple of these, Zoom and Ring, we've gone over in the past, meaning on best stocks to buy. A couple of weeks ago, I went over Ring Central, and then on a market wrap with members on, I believe it was the 23rd of January, we spoke about Zoom and the whys behind why I wanted to put on a long trade of Zoom. And I'm going to play those clips in a moment. I'll link to the videos at the back end of this video as well. So that way, if you want to watch the full video of when I was talking about these for context, more than welcome to do so. So let's begin with a reminder that tomorrow night, Sunday Night Futures Live, 6 p.m. Eastern Standard Time here on YouTube. We'll talk about the opening futures action. We'll talk about some headlines that could impact the broader market going into the new trading week. After all, we do have a Fed meeting coming up this coming week. And I'm not going to say it's the most important Fed meeting that we've ever experienced before. I think pretty much people know what the Fed is going to do. And the Fed usually delivers on what the market expects. So I'm not expecting a ton out of the Fed meeting. What I'm wondering is the good news already priced into the market, and is the market subject to a pullback on even positive news out of the Federal Reserve? We'll talk about that in greater detail. Now, when it comes down to our best stock charts for the new trading week, I do have one surprise chart that's not in front of you right now that we'll be discussing, but in the end, I will be posting down below. You'll find all the charts that we discuss for these symbols that we like going into the new trading week linked below for your reference. So let's get to it. Let's talk about the weekly chart at a bare minimum, perhaps weekly and monthly charts of Zim, Coin, Zoom, Ring Central, and our surprise ETF. So stick around at the back half of this video for that surprise ETF. Oh, and as a reminder as well, sorry to drag this out, we had a video demonetized because I dared speak about Bill Gates the other day. So I am not monetizing these videos. They demonetize one of my videos. I demonetize the next 30. So I do get my bit of retribution out of YouTube for having a policy against free speech. Either you have free speech or you don't have free speech. So please help support the channel by subscribing to TrendSpider, which I give away free to our silver and gold level members. So either subscribe to TrendSpider or subscribe to my service at The Contrarian Trader, where we send out trade alerts. We give in-depth evening commentary and weekend commentary, and members, we will be going over the week ahead commentary later on today, where I do a deeper dive on the symbols I'm about to talk about. We'll talk about not just the weekly or monthly charts. We're going to do a deeper dive. We're going to talk about entry points, exit points, stop loss points, and price targets on the daily charts, and what catalyst may drive these names up higher. Could it be a short squeeze, fundamentals, earnings, what have you? So if you're not currently a member, please take advantage of it. Subscribe to our 14-day free trial offer. Let's get to it. Okay, let's begin with Zoom. Closed out the session on Friday at $74.15, up nearly 7.5% on the week. Now, for full disclosure, I spoke about and traded Zoom last week. We booked some profits on Friday, and here's what I had to say about Zoom prior to us entering the trade. Okay, folks, welcome to Market Wrap for the 23rd. We're going to talk about a trade off the top of it. I mentioned earlier that I was pretty bored, and that's a bad thing. I'm looking for setups. Normally we do a lot of options selling, but the premiums aren't there. Normally we would have been involved with Lockheed Martin reporting earnings tomorrow morning, and we're not part of it. That we're not getting paid for these premiums to take on the undefined risk. So we need to walk away from these trades. So I was going through some of my charts, and I ran across Zoom, and this is a daily chart. It has yet to run, but it is breaking out on a daily time frame. And when I put it up against, volume could have been better. When I put it up against the ratio chart I had versus the Qs, this is on a weekly chart, you can see that we're beginning ever so slightly beginning to creep out of this wedge formation. So what this chart is telling you is that the Qs have shown more relative strength overall, and Zoom has been fairly weak, but now that's beginning to flatten out with the bias to change. Now, the Qs have had a very nice run of late, whereas Zoom, not really. So as we do a deeper dive, and I honestly haven't looked at these lower time frame charts. Let's go to a daily. A little bit of improvement on a daily. Let's go to a 4-hour. And the 4-hour on Thinkorswim is really what sold me. And let's update this. And there we go. So we're trending up. Right? We're in a triangle formation, but it looks like we may break out fairly soon relative to the triple Qs. Now, when we take a look at Thinkorswim on a 4-hour chart, you can see that we have broken out the last 4-hour bar. We did a retest. This is poised to go. This is poised to run. So I have an order in after hours. I'm lowballing it. Maybe I'll get hit. Maybe I'll lift it a little bit. But it's going to be an opening position, about a third of the intended position. So the question you might be asking is why? Why Zoom? Why now? What's the catalyst? Good question. Short squeeze. So here's Zoom. Never use the percentage of shares short. It's misleading whether it's high or whether it's low. It all depends upon shares short versus average monthly volume. And when we do this, we can calculate how many days we have to cover short positions. So we have 15.22 million. This is going to be about 3 to 4 days of short covering, divided by 3,580,000, 4.25 days. So not bad. Not bad for a squeeze. What are their earnings? Earnings date. So we have plenty of time between now and their earnings to get involved here. So Zoom looking good for as soon as this evening. To bonds. Now, fast forward on the week, and you could see that we had rallied off the VWAP in blue here, and we still have a very tight setup for a Bollinger Band squeeze. So I really like the setup here. We are going to have some resistance at around $81 per share, but at current, I really like the setup on a weekly chart of Zoom. Here's your breakout and a higher low on stochastics. So these are not just two squiggly lines. What these imply, or what these indicate to us, is that momentum is beginning to build. We've had a long consolidation, and the longer the consolidation, the greater the validation of any breakout or breakdown. Now, I think that Zoom is going to get resolved to the upside. This is why it's one of our favorite trades going into the new trading week. Now, we were in the trade. I booked some profits on Friday. Admittedly, I booked profits too early. Why? I saw the market fade, at least the NASDAQ fade, after a strong open on Friday. I saw it go negative. I said, you know what, first out, best out. Let's make these profits real. And we exited the position. Now, the markets did in fact recover. So I am planning on re-entering this trade as soon as Monday. We did leave out the session a bit overbought. Here's a 30-minute view. Not that it can't move up higher on Monday morning, but we were a little bit extended going into the close. And we do have some resistance immediately above, 2 resistance levels. And these are the automated trend lines that TrendSpider provides us. I did not draw these trend lines. Take the trend lines off, put them back on. There you go. That's TrendSpider. Now, the next chart that we want to talk about is Zim Integrated Shipping. Now, there is a catalyst that could propel Zim up higher. A similar catalyst that could propel Zoom up higher. And we're going to be talking about those catalysts with members on the week ahead commentary coming out later on today. So members, please, you may be watching this right now. You hear me talking about these names. Remember that we're going to be doing a deeper dive into the daily charts, perhaps even intraday charts, as well as the catalysts that could drive these stocks measurably higher. Now, Zim closed out the session at $18.61 on Friday. For the week, it was up 1.42%. and it did put in a new weekly higher high. Now, why is that significant? It's significant because we have been in a long-term consolidation, a multi-week consolidation ever since late November. We've been drifting sideways. That was resolved last week, and it was resolved to the upside. The stochastics are now hooking up. So much as what we're seeing with Zoom, we're also seeing with Zim. Higher lows and now higher highs. Now again, members, go to the members area later on today or tomorrow. I'll have posted our entry points, stop points, and price target for Zim. And we'll talk about it again on the week ahead commentary. Now the next chart up is going to be Coinbase. Now we've traded Coinbase in the past successfully, and last week it closed out the week at $61.37, up over 11.5% on the week. I think there's more upside to be had here. We did capture the 20-period moving average in yellow. We retested that support level. It held, and we rallied to close strong on the session. Now, I also like it because it has broken out above this wedge formation. It did so several weeks ago. And it appears as though we have more room to run before we hit resistance. If you're wondering where that resistance is going to be, join us at the Contrarian Trader. Link below, 14-day free trial offer, and get my premium content of as to where I believe coin is going to go and where we must stop out. Now, I could share with you one thing. I would not buy the shares of Coinbase where we closed out the session on Friday. Why? We're extended intraday. We're going to talk about that chart in a moment. I will talk about the price target I like at which to get long of Coinbase. And in all probability, I'm going to be selling some covered calls against Coinbase to generate cash flow, to throw a hedge on, because we do have the Federal Reserve meeting coming up, and that will cause some market gyrations. And we don't look at that as a negative. We look at it as a positive. So the key is acknowledging that we do have a volatile binary event coming up soon and positioning ourselves accordingly. Now, the next chart we're going to talk about is Ring Central. This is another one where I had spoken about Ring on a best stock charts, I believe about a week or two ago. And here's what I had to say back then. The next chart up is going to be Ring Central. Now, this is a real contrarian play, and this is right up my alley. And I want to go to a monthly chart first here because I love stocks that are left for dead and they're not being paid attention to. This is our wheelhouse. This is what we love to do here. We did it with gold. We did it with silver. We did the gold mining stocks, silver mining stocks, emerging markets. Nobody wanted them. We were buying them, and we've been having a great past couple of months with those names. The same holds true for individual equities. I will caution, of course, Ring Central is going to have earnings. In fact, let's bring up when their earnings are. Okay, so this is the IBD data for Ring Central, Investors Business Daily. I like to outsource my fundamental analysis and focus on the technicals. And Ring Central, they're going to be reporting earnings on February the 13th. Now, what I find interesting about Ring Central is that this is a stock that was trading over $400 at one point in time. Now it's trading, it closed on Friday at $36.26. And they have EPS growth for last quarter of 53%, 3-year EPS growth of 31%. So very strong earnings growth, and annual ROE, that's return on equity, is stellar. I mean, if you have a company that's got ROE in the teens, I mean, that's pretty respectable. This is outstanding. So really good fundamentals here for the stock. The beta is 2.18, and that makes it very volatile. Any read above 1 is a very volatile stock. So this is very interesting to us, and now let's talk about the whys behind why we're interested. So Ring Central, you could see that the shares had bottomed out back in September. And ever since then, all we've been doing is trading very thin, very lightly, consolidating. And what I always like to teach members is that when you have a long consolidation, there's a phrase I like to use, And that's this. The greater the consolidation, the greater the validation of any breakout or a breakdown. So when you have a multi-month consolidation on Ring Central, that sets this stock up, given the fact that it's got EPS growth that's very, very strong, for moving considerably higher from where it is right now. Now, RSI is very interesting in that RSI is flatlined. It's trading at around 27, I'll say. So if you're using this as a metric for quote-unquote overbought, oversold, it's pretty oversold on a monthly time frame. Now, doing a deeper dive into the weekly view, you can see that we're beginning to gain strength. And when you look at the Bollinger Bands, they're very, very tight. When the Bollinger Bands are tight, that sets up what you call a Bollinger Band squeeze. And looking at RSI has now stopped doing this sideways price action, some weeks up, some weeks down, to now doing this, higher lows. We've spoken about this before, higher lows. And now what we're getting is the ever critical higher high and a breakout. So we have RSI on a weekly time frame that is leading the price action on a breakout on price. Very, very interesting setup here. Again, members, tomorrow we're going to be doing a deeper dive strategy session on how we're going to trade RNG. Do we want to use a call spread using options? Long. Do we want to buy the common? We're going to talk about that more in a greater detail. And of course, stop loss points, entry points, and exit points on Ring Central. Okay, so as you can see, Ring has moved up since I last discussed it. We were long. We did book some profits on Friday, the 27th. And again, just like I did with Zoom, I was worried about the market going from a strong open to a negative, so I just booked profits ahead of the weekend. Now, it did rally into the close, so I still like this setup here very, very much. And in fact, we retested the lower band in blue, which is the VWAP, the volume-weighted moving average, and it held. It rallied to close back above the 20-period moving average. The Bollinger Bands are very, very tight. So just like with Zoom, we are seeing the potential for a Bollinger Band squeeze. And I would argue that with Ring Central, that the Bollinger Band squeeze is going to be, or is more mature. We are much tighter on the Bollinger Bands than we are on Zoom. So I'm really liking this setup. I am regretting that I booked profits a little bit too soon, but that doesn't mean we can't get back involved with it. We'll talk about the intraday charts on the week ahead commentary with members, and we'll decide, okay, do we want to buy at the open, or do we want to wait for the pullback? Do we want to wait for the Federal Reserve meeting? We'll talk about strategy. We'll talk about entry points, exit points, and stop loss points on Ring Central, along with all of these other charts in a moment. Now take a look at your stochastics. They are gaining strength, higher lows. We have both lines on Stokes above 50, extremely bullish. Again, folks, these are not two squiggly lines. What they are telling us is that momentum is building here. And when you have a long-term consolidation, as we've seen with Ring Central, and now a breakout of this strong consolidation, well, then the path of least resistance is now changing from sideways to now a bias to the upside. Of course, there are no guarantees, but the probability is that Ring Central is going to get resolved to the upside. Now, before we move on to our surprise ETF, which pretty much everybody hates, but we're beginning to like, let's give a shout out to our sponsor being TrendSpider. Folks, if you're not using TrendSpider as a part of your trading gear, you are missing an arrow in your quiver, because your institutional competition has been using this software for years. Not necessarily TrendSpider, but a version thereof. But TrendSpider has now provided the same tools, but to a retail audience. And the reason why I promote the product is because A, I use the product. B, it saves me a bunch of time doing my analysis. I can go through hundreds of charts over the weekend using their scanners, then backtesting strategies, and I'm able to automate my grunt work, speed up my technical analysis, and even improve my accuracy while speeding up my analysis. Why? Because the automated trend lines. I know at the click of a button where my support levels are on a weekly, monthly, daily, intraday time frame, and I'm able to reduce costly analytical mistakes because I use their alert functionality. And those alerts allow me to adopt a rules-based approach. If this, then that. Meaning, if we get a breakout, well, then I could open a position or add to a position. If we pull back and get a retest of a support level, well, then I'm able to buy at that support level, set a stop loss immediately above at the same price point, and keep my losses small. I'm able to find winning chart setups with their scanning software. And in fact, I'll show you the scanner that I used to identify Ring Central. It's no longer going to be on here because now it's broken out. But I used this scanner right here. And you don't need to build this. You could take this, rename it for yourself, and use it on your own. Now we'll click on this. We're going to scan the S&P 500 top 1,500 charts for a weekly rolling consolidation with a bullish bias. And look at all the names that you get to select from and do your analysis on. There are several dozen opportunities here, and this one trade on Ring Central helped me pay for a year's worth of the subscription to TrendSpider. So I would encourage you to use the link below, head on over to their website, click on the Explore product, take a look at the functionality, watch their demos, and then, of course, take advantage of their plans and pricing. Now, I get a 35% discount. I think they're right now running a promotion, 35% off as well. So just use that link below. Yeah, they were running a weekend promo. But if you're catching this video next week during normal business hours, you could use my discount code CON35 and still get 35% off. And it does help me out if you use my discount code. And even if you subscribe today, please use my discount code because I get a piece of that subscription because YouTube is demonetizing my videos. So I'm not getting paid by YouTube right now because they don't like what I have to say. So please help support the channel, help free speech by using my discount code CON35 or join the Contrarian Trader and get TrendSpider for free when you join the silver and gold level memberships. Now, the last chart we're going to go over is the ARK Innovation Fund. Yes, I said it. The ARK Innovation Fund on the month so far, folks. We only have a couple of trading days left to go. And we have a bullish engulfing bar, and we have broken out above this upper band of resistance. You can see that the stochastics are now beginning to hook up after spending literally months, pretty much a year, flatlined. Now the momentum is beginning to change. This is a classic contrarian trade along with Ring and Zoom. Nobody wants them right now, but that attitude is beginning to change. Will you be a part of it? So again, as I've mentioned before, sorry to repeat myself, members, we will be going over ARK and all the other names that I've discussed so far. We'll be talking about entry points, stop points, and price targets on these names. And if you're not ready yet to become a member, I completely understand. Please take advantage of my 5-part video tutorial of my top 5 favorite candlestick patterns. That's completely free. Use the link below. And when you use that link to subscribe to those free videos, what you'll get is an invitation 15 minutes to a half hour prior to us going live before our live streams. And the reason why it's important for me to build up an email list is because if YouTube decides that they're going to at some time suspend me or can't delete the channel, well, then I'm able to communicate with you via email and getting around big tech. So please enter your email address below. You will not be spammed. And hopefully I will chat with everybody on Sunday night for Sunday Night Futures Live, 6 p.m. Eastern Standard Time. Till then, have an awesome weekend. Don't forget to like and subscribe, comment as well, and I'll get back to you. Have an awesome weekend. Be well.